Good evening, everyone. I welcome you all to the earnings conference call of Vascon Engineers for the quarter ended September 30th, 2020. Joining me on the call is Mr. Rajesh Matre, our CEO of Real Estate, and Mr. Somnath Biswas, our CFO. I believe you would have gone through the Q2FY21 financial results and the result presentation uploaded on the stock exchanges and on the company's website. Given the nature of the times we are in, I hope everyone and their families are doing well. Let me begin with the company's business operating for the quarter ended September 2020. During the quarter, our focus has been on resumption and gradual ramping up of the operations. Our business operation witnessed significant improvement compared to FY20. Our construction activities and labor availability has reached to 60% at the end of September 2020, and we have started operations at all our project sites. We are witnessing month-on-month improvement in the execution levels. However, extended monsoon, social distancing norms, and other COVID-related guidelines to some extent limit our performance. With increasing availability of labor and flattening of the COVID-19 curve, we expect execution to accelerate during the second half of the year to make up for the shortfall in the first half. In this quarter, we have received an order from Epicons Consultants Private Limited worth 32 crores for the construction of new academic building for South Indian Education Society at TTC Industrial Area, Navi Mumbai, with the execution period of 12 months. With this, our current total order book stands at 1972 crores, which includes external EPC orders of 1871 crores and internal orders from our real estate launches of 101 crores, providing comfortable and strong visibility of the EPC revenue for the next 2-3 years. Government orders comprise 75% of our total order book, which provides visibility of faster execution while ensuring uninterrupted cash flows. Our focus is on accelerating the execution of order book, which will lead to better capacity utilization and improved margins. Commenting on the liquidity position, our position is adequate to carry out operations smoothly, and we do not foresee any liquidity concern in the near term. Coming to the real estate division, as you all are aware, over the last few years, the real estate sector is reeling under pressure, which got further impacted due to COVID-19-ensued lockdown. To provide the much required push the Maharashtra government has reduced stamp duty from 5 to 2%, which has translated into improvement in the demand. We are witnessing uptick in the sales inquiries of our ongoing projects, including in Windermere. In H1FY21, we did a new sales booking of 42,142 square feet, amounting to a total sales value of 39 crores. For new launches, we continue to assess the situation and we would adopt a cautious approach while launching new projects. Let me take you through the financial performance. Let me start with the standalone numbers. During Q2FY21, the company reported a total income of 93 crores, growth of 18% year-on-year over Rs 79 crores in Q2FY20. The company recorded an EBITDA loss of 2 crores and a net loss of 10 crores in Q2FY21. On consolidated basis, during Q2FY21, the company reported a total income of Rs 123 crores and an EBITDA loss of 1 crore and a profit after tax loss of Rs 11 crores in Q2FY21. Total gross debt as on 30th September 2020 is 252 crores. We continue to focus on reducing the debt significantly in the next few quarters with incremental cash flow generated from asset sales and Windermere apartment sales. With this, we can now open the floor for questions. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Hayan Patel from Pandalum Investments. Please go ahead.
Thank you for the opportunity. Sir, just one question on the operational numbers, sir. So basically, if I see the cost of material as a percentage to the revenue has gone up significantly. So can you please explain, is this because of COVID, and do we see this trend continuing going forward?
No. So yeah, the reason primarily is not COVID. On the EPC side, the gross profit, as I had explained in previous calls also, would fluctuate a little bit, but it is still pretty much intact. On the real estate side, this time we sold a few apartments in Windermere, which are, at cost. We do not have much profits coming from sales in Windermere, and I think that's why at an overall level, the gross profit is coming lower this quarter. The cost of sales seems to be higher, but this is a one-off because of a couple of apartment sales in Windermere.
Okay. So basically, this has been impacting by the real estate business and not the EPC business, is what I understand properly?
Right. That's right. EPC business is having very marginal impact because of COVID. As we said, a little bit of labor cost increase and a little bit of safety procedures at site, which is leading to a little bit of inefficiency. But I think these are very temporary. The impact of all this on the profits of the company would be very minor. And in fact, we are in discussion with our clients to reimburse a few of these costs as claims. And as that goes by, we should. And I think by from next quarter, these COVID-related costs would also come down. So I don't think that's a major concern for the EPC business.
Okay. Sir, on the industry front, if I see on the real estate side, so basically what we see that from the pre-COVID levels, and if we compare now, the real estate sales in Pune has picked up in a good way. So is this trend visible in our numbers too, going forward?
What you're saying is absolutely right. See, Pune has seen a visible, very, very visible traction. In fact, Pune is showing traction in segments where traditionally Pune has not seen in those levels, particularly in the apartments which are priced 1 crore and above. Having said that, with regard to our overall inventory, if you see in the portfolio is very, very less. So we have inventory in Good Life, which is an affordable project. An affordable segment is definitely hit by COVID-19. So this is the segment which is hit by this particular issue. Which is not hit is projects like Forest County, which are in 90 lakh brackets typically, which are selling very, very well. But we hardly have any inventory. Most of these projects are in excess of 90% sold. In the super luxury segment, Windermere saw a lot of traction. So in the last quarter, we did sales worth 27 crores. So and this sales are coupled by obviously reduction in price. We are also trying to take the opportunity of COVID and the sentiment and the renewed interest of people who are looking for deals, which consequently is seen in margins, but from a cash flow point of view, it is boding very, very well. So the idea as far as Windermere is concerned is typically to sell fast and to decrease the debt on that particular project. So overall, if you ask, from a trend perspective, yes, Pune is seeing a lot of traction. We don't have so much inventory in our books to literally capitalize on that trend. As far as Windermere is concerned, yes, we are seeing the traction. We have capitalized, and in this quarter also we would like to continue the same.
Okay. So, sir, any specific campaigns on the sale or the marketing side we are doing for the festive season?
See, from the marketing front, in fact, we are not spending much. In fact, the overall market has changed, so we are not front-ending any spends. We are trying to back-end spends by maybe incentivizing the channel partners, so that in case the deal happens, then only we get to know the payout. But upfront, we are not spending.
Okay. Sure. Sir, last question from my end. Sir, for this year, so I won't ask for this year. For next year, sir, any guidance which you can give us, which the field which you have in the business currently?
So, see, on the EPC side, I've always maintained in all calls that, typically about a third or 30% of our order book historically has been what we execute. This year, of course, so we had an order book of about 2,000 crore even at the start of this year, but because of COVID, we will not be achieving that one-third target. Again, we do have 2,000 crores in hand. We are expecting to book an order or two more before March. If that happens, then, as I said, a third of our order book, which should be upwards of 600 crore, is something as a top line of EPC which we can hope for next year. Real estate depends on project completion, so real estate is very difficult to predict year on year or even quarter on quarter. We do expect to finish 2 projects end of this year or mid of next year. So those would give revenues to real estate, and then real estate could also do upwards of 100 crores next year. But EPC is fairly linear in its prediction. We should be able to do more than 600 next year.
Okay. Sure. Thank you, sir. If I have more questions, I'll join back in the queue, sir.
Thank you.
Thank you. We'll move on to the next question. That is from the line of Rohit Natarajan from Antique. Please go ahead.
Yeah, hi. Thank you for this opportunity. So if I understand it correctly, currently we have an external order backlog of 18 billion, of which government is contributing close to 75%. But if we could, further strip down to how much is the slow-moving orders, or maybe some color on the top projects like the Maharashtra Police Housing project or the PW Raipur project, some color on some qualitative flavor as well as some quantitative numbers on it.
Sure. It's a good question. See, out of the 1,900 crore order book, post-COVID and post all the flux that has happened over the last 4-5 months, we are today at this position. Like you rightly said, Raipur had started even pre-COVID and was doing well. It took a little bit of a break, and it's now back to peak levels. We are doing more than 10 crores a month at Raipur project itself. So I would say it's already in fifth gear, running at full speed. Police housing was waiting for certain approvals, tree cutting, environmental, all of them have come. We've got commencement to start work. We've started work at site, in fact, and raised our first bill this month in Q3. And so we expect, and that project will also pick up. It's a big project, so the velocity of work month on month for the next 6-8 months will continue to pick up at that project. So we should also reach good levels of billing by year end on police housing. The MMRCL project we have got in South Bombay has not yet started. We are waiting for the last set of clearances from the government in terms of, there's some road clearance that is needed. We are expecting it by end of November, and we are ready to start work in December. Goa Airport, we started work. There are 2 phases to Goa Airport. There's one existing building and a greenfield project. The existing building, we've already started work and raised our first bill. The greenfield project, the environmental clearance is again expected by November and December first week, and then work would start. All our drawings, designs, and approvals are all ready. So that project will also be scheduled to start in December. The project in Pune for government housing is well underway, is also at fifth gear. We're doing more than 4-5 crores of work there. That's only 120 crore job, so that's about the rate at which work will happen. We've reached those levels already. And Lucknow is also at full swing. Adampur Airport is in full swing. So all the government projects, there is no hiccup, touch wood, at this point of time. The private projects that we were doing for a couple of builders, Godrej one, they are already sold out and we were at the fag end. So in spite of COVID, I don't think it is having an effect on the completion timeline. So that is going on fine. Couple of other projects in Bombay with builders, yes, it is slowed down, but this was expected and anticipated by us. So in our projections also. So I would dare say out of 1,900 crores, not more than 200 crores is slowed down. The rest are, doing well.
Sure. I missed out on the metro rail depot of Bangalore. What exactly is it?
Yes. That is also doing, that is also reached, I would say fourth year, fifth year. We are doing more than 3-4 crores a month over there, and in fact that will go up over the next few months. So that project is also well on track.
Okay, sir. Then coming on to the order inflow part, I see the peer group. I mean, there's a lot of opportunity within the buildings and factory space as such. We have seen traction in urban infrastructure as well as these commercial buildings and building space. A lot of order inflows happening on that front. Are we missing out something on that front, or is there something big in pipeline ahead?
So, see, I've always maintained, we have a little bit of a restriction in terms of our BG limit. Now, we do have 25 crores of unutilized BG limit. We are trying to be as efficient as possible. See, the moment to be honest, grabbing an order is not too difficult. Like you rightly said, there are orders, there are government tenders coming up regularly. To order book another 500 crores is not a difficult target to take at this point of time. But we would like to be, little bit choosy in terms of the levels of profit we would desire from these orders. Because once we put up our BG limits and we are gone, then for the year or so again, we might not be having enough BG limits to keep order booking. So we're not being greedy on top line. We are being cautious to ensure that we have our desired margin. Like you said, we are working on 2 projects where we think we should be able to strike gold in the next couple of months. So hopefully we'll have some good news before the year end.
So if I understand it correctly, we have, what is the unutilized BG limits or the non-fund-based limits that you have in hand?
At this point, 22 crores.
Okay, that means you can roughly bid somewhere around 70, maybe additional 80 or crore kind of order inflow.
No. You can bid 20 times. I mean, 5% is the requirement of non-fund limits for guarantees. So typically, we can bid up to about 400, 500 crore base, 400 crores based on a 20 crore.
No, but there is something that you have to give against the mobilization advances. You have to give a bank guarantee. That is 10% of the order backlog.
So you're right. So those things, see, what happens is a little bit of our CC and a little bit of rolling. We have assets in place. So when we get a new project, we don't necessarily need to spend good amounts to buy assets. The asset purchase, even if needed for shuttering, comes only after the second or third bill, because the first 2-3 bills go for design and excavation and mobilization. So far we've managed. Again, as you rightly said, see, this is a tricky thing for us. If we start putting up our BG limits to draw down advances, we can actually utilize it better to keep our CC limits even lower and bring down the interest cost a little bit, because we do have advances available from our clients upon presentation of a BG. But we are not utilizing all of, or drawing down all of those advances, because again it blocks the BG limit. And that's even more detrimental to growth of business, because then I can't order book further. So this game of BG is a little bit tricky, and we need to be cautious how we put up our BGs and for what purpose we are utilizing it. So like you said, if it's purely for performance that I put up 20 crores, I can back 400 crore order. Or I can pick up 300 crore order and then, take a little bit of 5-7 crore advance to kickstart these orders. So yeah, at least 300 crores I can definitely order book with this balance. Also, before March, another 20 crore of BGs are scheduled to be returned or expired from our various other projects. So we would have 20 plus 20, 40. Based on that, a target of upwards of 500-600 crores of order booking is what is possible and what we have taken.
Okay. On the retention money part, we have seen in the industry across that government is making some proportionate reduction to the extent of work that you do. So are you not beneficiary of that? I mean, have you not booked any other government orders where, some retention money relief, something of that sort has come to you?
Yes, it has happened. In one of the projects, we did manage to, based on the government directives, we have written to all our government. We had 3 projects which were at the, closer to completion, not more than 50-60% completed, whereby these clauses, this directive could be used. We've written to all those clients. One client has responded positively and in fact even released a bank guarantee of ours and has promised to release a bit more in the next month, which is what I bank on for further order booking. Couple of other clients, although they are government clients and although they are aware of the directive, are a little bit slow in moving, but it is positive and I think we will benefit from it in the next couple of months.
Okay, so you have plugged in these numbers within that 20-25 crore of additional BG limit?
Yes.
Okay. So then coming on to that monetization part, I mean, is there any thought process? I understand it's very difficult at this juncture, but non-core assets, what is the situation over there?
So look, the low-hanging fruits have already been monetized a year ago. So as of now, we only have a few tough-moving, bigger non-core assets which are on the block. As you rightly said, this is. We were working hard on them. We would have seen some fruit had COVID not happened. Now is not really a time We have a hotel in Goa which we do intend to sell, but again, now the hotel industry has to sort of revive a bit. And so yeah, so we're working on, so there's a land in Aurangabad which we are also working on. There is a building in Bombay which we are working on. So hopefully, yes, see the non-core, we have a separate team, we have a separate sales team which is working only on the non-core assets, getting the mandates, and hopefully, again by year end, hopefully we might have a good news on that as well.
Sure. Then all the best for the future. And should there be any more questions, I'll get back. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Parth Sangvi from Sangvi Associates. Please go ahead.
Thank you for the opportunity, sir. Sir, I just wanted to know after the reopening of the economy, where we are seeing the increase in the demand from the real estate point of view as well and from the EPC point of view as well.
Where are we seeing the demand, is it? Where are we seeing the demand, did you say?
Yes.
So I'll answer for the EPC part first. See, we have, even before COVID, we're not very bullish on taking huge exposure to private real estate. We're still waiting for RERA norms to consolidate, and I think private real estate is a very good space to be as a contractor, but a couple of years ahead, whereby now the shock of COVID is absorbed, and then the discipline with which RERA expects you to operate becomes a norm among all builders, and then I think contractors will definitely face a much better working environment or a much better safety net while working in the private real estate space. As of now, it is still a space we would like to be very cautious about or stay a little bit away if we can on the EPC side. So even if we approach any of these jobs, we make sure we do not put up the company's guarantee limits or bank guarantees to any private player, and we ensure that we negotiate and get our payment terms and advances sorted before we take any such exposure. Also, we operate from a clear escrow account. At any point of time, there will never be any cash outflow from the company towards that project. If it's a private project, we would never take that call. On the government side, there are orders coming. There are various government agencies who keep floating building orders. And so as I said, for our order book target of whatever we have for the year based on our BG limit, we can be cautious and try to grab good quality orders rather than being hurried up to take any target that is available in front of us. Rajesh will talk about the real estate.
See, on the real estate front, from an overall perspective, if you want to speak from view from the macro point of view, there is definitely a decrease in demand, which obviously is going to improve when the overall economic activity and the economy comes. But the supply side contraction is much more than what the demand destruction that has happened. That is one macro trend that we are seeing. Second, there is a lot of migration from low-level developers towards more organized developers or brands per se. Therefore, the consolidation which started right from RERA to DeMon to all which has been happening in real estate has only accelerated the process, and therefore we find buyers are tending more towards organized developers, and therefore organized developers are going to benefit more from what has happened post COVID. Lastly, what is also happening is people are looking for more larger spaces, which is the generic trend. This is more because there is a lot of end user demand, that has come. There is a lot of opportunistic, opportunities that are available with a lot of developers whose prices have been high or ticket sizes have been very, very high. Developers are reluctant to cut the price. COVID has given them an opportunity to drop their prices, and actually, the demand actually met the supply over there, and hence we will see a lot of, inventory being released, and buyers are getting those opportunities, and therefore we are seeing a lot of traction in the luxury segment because of that. So these are three generic trends that we are seeing. Going forward, if you want to see how we are going to capitalize on the opportunities, yes, we are looking for launching in segments where, we are not looking at affordable housing segment, which is reeling from the COVID-19 impact, and I think it will take, good amount of time by the time, this improves. And, focus on, not a luxury segment, but, a segment just, if you talk in terms of Pune, between 70 to 90 lakh segment, that should be doing very, 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 very good. So this is from the real estate front.
So what kind of discounts are we offering currently? Just to check, I mean, on an average, not on project basis.
See, if you see from the Pune market perspective, I think, the luxury market has seen a discount which were going to, as high as, close to 25%. The other segments, have not seen any, large discounts, maybe, of 5-10% over here and there. But other segments, in fact, prices have actually increased in the other segment as far as Pune market is concerned.
Oh, on the luxury end or on the mid segment? Hello.
Can you just repeat?
Yeah. So I was just trying to understand that in this segment the prices have been increased.
The prices have been increased in the aspirational, kind of segment. So wherever the ticket size is between 70 to 90, the firming up of prices has definitely happened.
So is due to supply demand gap or is there something else?
See, overall demand was more, and yes, the supply demand gap. See, the organized developers are almost, completing their inventories. So as inventories are getting finished, they are definitely being beneficiaries of this.
Okay. Thank you, sir. That's it from my side. If any question I have, I will get back in the time. Yeah. Thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Manish Goyal from Enam Holdings. Please go ahead.
Yeah, thank you so much and very good afternoon. I have few questions, sir. On EPC side, you mentioned that we have reached to 60% pre-COVID levels on execution front. So, probably, when do you expect to reach 100%, and what kind of revenues can we see in the second half?
Hi, Manish. So yes, as we said, we've done about 60 crores on EPC in Q2, and so in Q3 itself, I would stay clear of actually projecting numbers, but yes, this could be taken as 60% of what we might achieve in Q3, and then Q4 should be at least another 10-20% more than Q3. So to answer your question, I think somewhere between Q3 and Q4, somewhere in the month of December, January, we should be back to almost 100% of execution.
Sorry, Sundar, I missed on Q3. You said what growth we can look over Q2?
So Q3 we should be closer to 100 crores, and Q4 should be hopefully more than that, as long as there's no hiccup in any of the projects. As I said, so far, touch wood, all projects are on track. The 3 projects, as I said, MMRCL, Goa, and MMRCL and Goa, which have not yet started, are scheduled to start in December, and police housing has already started. So all projects will be running post-December. So from January to March in Q4, definitely we should see full utilization of the order book and execution at full strength. And labor by then is also expected to be back to almost 100%. We are at 80% of the required labor already. So I don't see any issue with complete 100% execution of our order book at full speed from January onwards.
Sure. Okay. And on the margins front, do we expect to achieve normalization in Q3 level?
Yes, the GP, of course, in the first 2 quarters should not be read as because of certain things because of COVID, as we've also taken certain hits in first quarter, and that keeps reflecting. But Quarter-on-quarter, third quarter GP should be very healthy, and by fourth quarter it should be at its peak, and our GP levels are good. That's good. There's no deterioration in GP.
Sure. So ideally, at gross profit level, we should look at 18-20%?
Yes, we should look at 18%. Yes.
Okay, sure. And on the cost rationalization, like what efforts we have taken and what is the sustainable reduction in fixed cost can we probably see as a year as a whole?
So in the first 2 quarters, of course, we had forced reduction in fixed costs. Offices were shut, electricity, traveling, rent. We did renegotiate a lot of rents with people and salaries as well. So obviously we had huge reduction in fixed costs in the first 2 quarters. We were forced to do it. From Q3 and Q4, for our nature of business, the reduction from last year, if you see year-on-year, would be not so much. I wouldn't say we would be able to reduce more than 10-15%, because really we have very few offices. We operate some very small offices already. Most of the people operate from site. So the question of trying to get into this work from home and save rent and electricity doesn't work too much for us. As it is, 80% of our staff are already at site. So we've given up a couple of offices. Having said that, we've given up a couple of small offices. So rentals are down for the year. We do not expect to again take more offices for the next year or so. So there is a reduction, but I think if you look Q3 of this year versus Q3 of last year, I don't think our fixed costs would be reduced by more than 10%. Yes, currently there's not much traveling happening, not much flying around, all of those, but those are all small reductions, and maybe by next year they'll probably be back. So I don't think permanently we would be reducing huge amount of fixed costs, not more than 10%, I would say.
Sure. And sir, on real estate front, you mentioned that the inventory levels are lower for the company. So because what we see is that of late in real estate, ready to sell apartments are seeing much higher demand than something under construction. So what would be our ready to sell inventory which we can probably liquidate quickly in next 6 months and take the benefit of lower stamp duty till December and then going forward? So would it be possible to share the numbers?
From a real estate point of view, we have only Windermere which has ready to move inventory. The rest of the projects are under construction projects. Of that, the projects in the Kharadi area, Forest County, Forest Edge are almost 90% sold. There's one small project, Protect, which is again 100% sold. Other commercial offices, Platinum Square, are also 100% sold. We have an affordable housing project where, in fact, we have sold to an extent where the area that has been launched, which is roughly 3 lakh square feet, the receivables are sufficient to construct even if you don't sell anything over there. So we are prioritizing, or accelerating construction so that internally the target is by March we should give possession roughly for 3 lakh square feet, if not March, at least by June, so that we can see visible traction from the balance inventory over there, as you rightly said. Immediately we can capitalize only on Windermere, and there where the focus is. In the last quarter, in fact, we sold around 6 odd units. In fact, we have sold a couple of more units over there, and I hope we are internally targeting a couple of large units to sell in this quarter.
So Rajesh, what would be the inventory left in Windermere? Sorry for my ignorance, but
say for example, overall inventory in Windermere is large, but if we say our share of inventory that is left in Windermere, it will be close to 120 odd crores.
Which is kind of ready to sell time. There's not much.
Really would not be ready to sell. Bungalows are not ready to sell.
This 120 crores doesn't include the bungalows, right?
Yeah.
Okay.
So it is roughly 80 crores plus couple of bungalows, so it will be 130 odd crores. Yeah.
80 crores plus bungalows is 130 crores.
Yeah.
Okay. But bungalows, we'll have to spend some capex to kind of.
Yes. So overall, the balance construction cost would be close to, including bungalows, it will be close to 35 odd crores, 35 to 40 odd crores. And we have receivables. Our receivables will be close to 25. Total 65 is the balance receivables in to 25 of it.
Sure. And last question on what is the current gross debt and net debt for the company at a consolidated level?
Gross debt would be around 250. Total debt 250, net debt 180. Total debt is 252, net debt is 187.
Fine, sir. I'll come back in the queue. Thank you so much for all the answers.
Thanks, Manish.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
Thank you all for your participation. Wish you a great day. Please connect to Stellar IR Advisors for any further queries you may have. I'll see you again next quarter. Thank you.
Thank you.